Hey investors, welcome back to Muffet Investment View. Today we are looking at the overall Reit sector. We like this sector because of the fall in 10-year yields. This means that the interest that they have to pay for their debt will also fall. The REITs have had a bad year in 2023. However, they are starting to outperform as the yields have started to fall. However, one thing to avoid in the REIT sector is commercial real estate. This sector of the REITs is the most vulnerable to a downturn in the economy. If you have been following us on YouTube, you would know that we like the senior living REITs. We have covered Welltower, Omega Healthcare, and LTC Properties. One of the most favorite REITs recommendations on YouTube is Vici Properties. They are the biggest landlord in Las Vegas. Vici Properties specialize in gaming properties. They are located in attractive areas, and most of their clients are investment grade like MGM and Caesars. They are currently trading at $30.75, and their market cap is $32 billion. Their dividend yield is 5.45%, and the price-earnings ratio is 12. So in today's analysis, we compare Vici properties against the senior living REITs that we have covered. It is important to note that Vici properties are different and operate in a different sector, and so comparing Vici with others by simple financial metrics is not really useful. But some of the metrics like dividend yield and total debt does matter. And so we have done a table highlighting all the REITs that we are looking at. We like all the REITs that we are analyzing today, and we want to see which of these or combination of these would be a better buy. With regards to the sector, we like the senior living REITs better. Health and shelter is an essential requirement, whilst gaming and entertainment is discretionary. So the senior living REITs, in our view, are more resilient to economic downturns than the gaming REITs. But we do agree that Vici has some of the biggest gaming operators as tenants and relatively protected. With regards to leverage, Welltower is the least leveraged. This is reflected in its share price behavior. It has significantly outperformed the other REITs, and so it now provides only 2.2%, which is the same as the inflation rate. And for gains, we are relying on EPS growth. The other three have similar debt to capitalizations of 0.5. Of these, Omega Healthcare offers the highest dividend at 7.3%. If we compare the charts of all the REITs, one thing that stands out for Vici is that it was the first to recover from the COVID sell-off, followed by Welltower, which has outperformed Vici recently. The other two are yet to regain their pre-COVID highs. However, when we compare the daily charts, we can see more recently the senior living REITs have outperformed Vici with Welltower, again outperforming, followed by LTC. It looks like Omega Healthcare is outperforming, but if we compare the recent highs, we think that LTC is better. This can be better illustrated with ratio charts comparing individual REITs with the S&P 500. Here it is clear that Welltower is the outperformer again with the ratio at all-time highs, followed by LTC, then Omega, and finally Vici. This is why we think that the market is valuing senior living REITs more than the gaming REITs. Now, how do we use this information to our advantage? Clearly, the best horse is Welltower. However, this is offering a very low dividend, and we think that it is not worth entering at current levels. We wait for corrections below $90 before considering an entry. LTC is our second strongest horse. It also offers a good dividend of nearly 6% and also has the smallest capitalization. This is likely to grow much faster than the other REITs if interest rates fall. Omega comes third and offers the highest dividend. Another option is to enter 2 or 3 of these in one allocation block. For this, we think that a combination of LTC with Vici or a combination of Omega Healthcare with Vici would be a good idea. These are just our own opinions and not investment advice. One of the downsides of LTC properties is credit risk. It will be affected more if we have a financial crisis, and we will bail out as soon as we smell a crisis. We hope you liked this video. Please share and comment. Subscribe for more updates.